Welcome to Angel Impact, the official podcast of the Wisconsin River Business Angels. A major milestone, our first exit.
So yeah, we're talking about an exit, right?
Yeah.
Yeah.
Our first exit.
Your first exit.
This is a milestone.
All right. Well, talk about it.
Sure. This was from one of our investments called Fund 7.
Okay.
That was the fund was created and managed by Generator, which is a seed accelerator from Madison.
Yep.
They have a number of cohorts, but anyway, this was a 3-year fund commitment. We finished our last, we made our last capital call. So, we were invested in it to the tune of about 315,000, I think, our group over the 3 years. Through that period, that fund has invested in, I think, over 60 companies.
65, right?
65, and it'll probably be over 80 by the time the fund is exhausted.
Yeah.
So we have a small stake in each of those companies.
Yep.
By virtue of our investment in the fund. Our stake in it is 2.82%, I do believe. So
Okay.
Whenever there is an exit, a company exits, the Generator Fund 7 gets their percentage. It's anywhere from 6% and up. It depends on the valuation at the time, but they will invest up to $100,000 in each of their cohorts that they bring in.
Okay.
So on this particular exit, they had $100,000 invested in it, of which we were entitled to 2.82%.
Mm-hmm.
That's our basis.
Yeah.
We realized a gain in just a matter of 2 years of 3x. Well, it's over 3x, probably 3.2x, something like that.
Yeah.
So that's a pretty substantial return on investment.
Yeah.
And again, these are the winners. We call the winners.
Okay.
But if you compare that to a mutual fund, again, if you're looking at 12-13% annual return, which is very aggressive for a mutual fund.
Yeah.
Your 1x would be in about anywhere from 5 to 7 years.
Okay.
So 3x in 2 years is pretty substantial.
Yeah. Okay. And you had a formula you were going to talk through, or
Yeah.
something? Yeah.
Yes. A matter of fact, I can share my screen.
Take a look at it. Yeah.
Sure. And I just finished this up this morning. So the exit was Gem and Jewel was one of the companies that they invested in. They had the full $100,000 investment in this company right here.
Mm-hmm.
Gem and Jewel, by the way, was one of the first companies. They were in the first year cohort,
Mm-hmm.
and Leon and I really liked the company. So we started a discussion with her. We met her a couple of times on Zoom, and we were trying to negotiate the investment. She did have a raise open at the time, and we were trying to get in on that. But during the course of our negotiations, somebody else came in that was very interested in her product, and basically said, we are very serious about possible acquisition.
Uh-huh.
As a result, we would ask that if you want to work with us and negotiate some kind of terms for potential buyout, we want you to freeze any more investment. So we don't want you to give away or sell any more equity in your business until we can come to terms.
Yeah.
So that basically shut us out. And I think earlier I mentioned in another podcast that timing is important in some of these things. We don't like to do the act now or lose everything. It's just the train moves fast. That's just the way, that's the nature of the beast. And you should understand that as an angel investor. So this was one that unfortunately.
Can you tell us a little bit about Gem and Jewel? What was that?
Sure. Gem and Jewel, they came, I think she was from Kentucky. She was from Kentucky.
Yes.
And she developed an application. It was a storefront basically on the internet. Where jewelry stores, all these little jewelry stores across the country could post their inventory to make it available nationwide.
Mhm.
A lot of the jewelry companies, they sit on a lot of inventory at any given time, and some of it just doesn't move real fast.
Mhm.
Some of it might be what they consider dead inventory. It's not moving. So this was an opportunity to be able to turn that into cash. And then she had some kind of compensation model, which I don't recall exactly what it was. But anyway, the jewelry stores would join, or this was a software as a service kind of program.
Yeah.
And then they would have a storefront that they could manage, and they could manage the inventory. And then she got a percentage of sales plus some compensation when there was a sale.
Mhm.
And it was an insurance company, wasn't it, Leon?
Yes,
That ended up
purchased them
bought them
out.
out. That was very
Mhm.
interested in it. So I don't know exactly what their interest in it was, but they did finalize the buyout, the purchase. So for their $100,000, you know, generator got compensated in the buyout.
Mhm.
Our percentage of that $100,000, our basis was $2,820.
Yeah.
Because that's our stake in generator is 2.82%.
Yeah.
So if you take 2.82% times 100,000, you come up with 2,820. So we consider that as the basis.
Yep.
Now the basis is divided amongst these investors.
Yep.
And then it was allocated here. So again, because of rounding error, we're 3 cents off.
Yep.
2819, 797 versus 2820.
Yeah. Okay.
Okay. And I show the gain here because I think it's important to know that on that investment, holding that investment for 2 years, it brought a net gain of, or I should say a gross gain of 10,088 or 887.99.
Yeah. What kind of a
93.
what kind of a multiplier is that? Any idea?
I can check that right now. Let's
Like
just
11
do
divided
this
by
here.
3, roughly. Right?
Yeah.
So,
Yeah. So I can take, let me just do this here. Plus this divided by this. You got 3.8.
Yeah. It's
And
almost
that's
4 times,
gross.
yeah.
That's a gross return.
Okay. Yeah. So you
Our
quadrupled
model,
quadrupled your money in 2 years, basically, with that.
basically, right.
Yeah.
But our model is set up this way for distributing any earnings from that LLC.
Yeah.
We first distribute every investor's basis. Then we have a service charge expense for all the paperwork that and the disbursement.
Yep.
That would be for Midwest Wealth Ventures. That's our LLC, our entity, management entity.
Yep.
And then there is a net for disbursement. So that net for disbursement is 13,457.93.
Yep.
Okay, so the investors get their basis back first.
All right.
Then the net we distribute at the net less the expenses is distributed 85.15.
Mhm.
So 85% of the net disbursement goes back to each individual investor. So that gets added to their basis.
Yep.
And this is the payout for each of the investors. That would be their basis first.
Yep.
They get their full money back. Then we take expenses out, and then we divide the rest 85-15, with 15% going to Midwest Wealth Ventures.
Okay. Yeah.
So, and again, if there was no exit, we've never gotten compensated. We don't
Yeah.
get compensated until there is a successful exit. If that exit doesn't yield enough to compensate the investors, we still don't get anything. They get their money back first,
All right. I see.
and then we get a cut of the delta of the net increase, the net gain.
Yep.
And this is and again, I did the math here. If we add the total payout for the investors plus what goes to our entity, comes to 1307.93, and
Okay.
that was the amount of funds that were deposited in our account.
Yeah. Very good. Your
Now we
investors-
just need to write the checks for the amount shown there
Yep.
to the
And send them out to our investors.
Yeah.
investors, and then they can take that money to do other things, either invest in some new opportunities, or
Yep.
if they owe us any money, they can pay us, or however they want to handle it. The rest is theirs to use
Yeah,
as
they can do
see
whatever
fit.
they want.
It's their money coming back.
Yeah.
And understand this is one exit out of 65.
Mhm.
64 other companies that are still in the fund, active and growing.
Yeah. Okay. Got it. And that's fund 7 or generator.
That's fund 7.
Okay.
Which is managed by Generator.
Wow. Okay. Huh. Yeah.
Yeah.
Okay.
See, this is a hybrid of angel
Yeah.
investing with a mutual fund model.
Right.
It's
right.
instantly diversified. And I think that was the attraction for our investors.
Yeah.
So they don't have to look at any of those companies that Generator invested in. They don't have to. They
Yeah.
can. But what Leon and I do, we're very active with the Generator program. As a matter of fact, we had a great meeting with them yesterday because now we're talking about the next fund that they're raising.
Mhm.
But we're very much engaged with all of these companies. We always participate in what they call a mentor swarm. So
Mhm.
through their training program with these entrepreneurs,
Mhm.
they bring in investors at various stages and use those investors to provide feedback for these companies. So we act as mentors, as advisors, and help them to grow and develop, based on our knowledge and experience, whatever positive information we can impart with them.
Very interesting. Yeah. And yeah, I mean, as you haven't had an exit before, that's the first time I'm seeing that spreadsheet, that tracks the way that you distribute
Distribute. Yep.
Yes.
the profits. And I'm also, I'm learning more about Generator and Fund 7. I didn't realize there were that many companies in Fund 7. That's really that's kind of astounding. And one question I have before we kind of wrap this up, it's like, okay, yeah, Fund 7 is really this clear and very compelling hybrid between the strengths of angel investing and the strengths of a mutual fund. How many of those things are out there, and then how old is that concept? When was the first time that was tried?
Well, this Generator is one of the top 15 in the United States. So there's got to be several hundred of these accelerators.
Accelerators, yeah.
Accelerators. Now, and there's a distinction here I want to make.
Yeah.
There are accelerators that provide education and funding in some cases for entrepreneurs,
Mhm.
but there are also angel investment funds, of which Generator Fund 7 is one. That is an investment fund.
Yeah.
And those are very popular. So in Wisconsin, how many? We've got a Winnebago Fund. We've got the Idea Fund.
There's about
we've
half
got
a
the
dozen.
Winnow Fund. About a half a dozen. And these funds, they have a fund manager, again, very similar to a mutual fund.
Yeah.
And they have a pool of money that they can allocate to investing in startup companies as angel investors. So, it's basically the mutual fund model at the angel investing level.
What do you guys look for in a fund like that? And then what makes Fund 7 unique, would you say?
Well, it's a Generator. We're very high on the Generator organization. They really have developed a strong program for developing these entrepreneurs. They also do a tremendous amount of screening, interviewing. They start with 1,000 applicants, and they end up screening it down to, probably 20, 25 a year at most, I think, for all of their programming.
Yeah.
So they do a really good job of screening, of determining which entrepreneurs are probably the best prospects, and then bring them in. And then their programming is very, very good, top notch.
Okay.
So we like the way they prepare entrepreneurs, and we get to see them early on, and then we get to see them as the pitch night, which is like their graduation, and they invite all the investors and other entrepreneurs to come.
Yeah.
And we can see their development over that period of time, and they do a very fine job. Again, being 15th in the country is remarkable.
Yeah.
Out of about 1,000 of these accelerator programs. So
yeah, and this must be this must give a real charge to your members in the WRBA, to have have this first exit this way, and then to know that there are more than 60 other companies in that fund, and
Right.
to kind of, it's like that would be kind of fun for me, just to see those exits happen over time. And as you said, they're not all going to be winners, but a lot of them will be. So that's exciting. Right. It's exciting to think about that happening over time.
So the investors like this ability that they got a distribution of all these high potential companies.
Yep.
And number two, because Jeff and I are working with them, it probably 2-3 months before they ever become known publicly, we can know which ones look like they might be interested to put additional investing in. So we have done that in several cases. Then we supplement that with other opportunities we find around the state here and the nation.
Yeah, we get a front row seat to those.
Right. Let me ask you this. Could an individual angel investor invest in Fund 7, or do you have to be part of a group to do that?
There was a minimum, and I can't remember what the minimum is.
Okay.
So it's pretty substantial. If you wanted, you could go in by yourself if you met the minimum requirement.
But that's one of the benefits of being in a group, is that you can, be part of it.
You can.
Yeah.
Exactly. You don't have to come up with that big chunk, because again, because it's a mutual fund, you probably could consider doing that. But you want to save some of your investable money for some of these other opportunities, the follow-ons.
But there's so there's the strength in numbers. You don't have to come up with it all by yourself, and then you have all the the network of expertise and experience to rely on all these ways.
I did want to mention too that one of the previous funds, all the funds are still active, by the way, going back to I think 2011 or 12. One of them had one exit that basically compensated all the investors their original amount.
Oh, wow. Okay.
So they got all their money back, and they still have 25 or 30 investments in these other companies.
Wow.
So that can happen.
Yeah. And so this is like the 7th of those funds, is what you're saying.
Yes.
Right?
Okay.
Yep. Correct.
So how do they know when to start a new one? Or are they
when the other one gets exhausted? A fund, by its definition, has a finite amount of money in it.
I see.
And when that money is gone, when it's all invested, then they'll open up another fund.
Well, how do they set the amount then?
It depends on their strategic goals and what they think they can do.
Okay.
I think this next fund is 10 million.
Okay.
The next fund that they're coming up with. So Fund 8.
These are, this is very cool. I hope anyone who's listening, who's thinking about angel investing, sees that this is a great way to get involved with it, and especially I think to get your feet wet if it's not something you've ever done before. Because it's like you get the benefit of a group on, kind of compounded on several levels, I would say. So.
And then knowing the investor's interest, we can identify certain types of investments. If these people say, I'm really interested in healthcare, we can say, hey, here's some that are healthcare for those group of our investors.
Yeah.
By the way, some are interested in some other type of thing like IT or something else. And we can say, here's some investments there. And we might go do further due diligence to bring those as additional investments as a separate entity forth to meet the interests of our investors. So we can be flexible to meet their needs.
Yeah. My interests and experience kind of lead me to advanced manufacturing. And I act as a judge for the governor's business plan contest. I am a judge, I should say. And I've also judged in the Venture Summit. Also act as an advisor and mentor to some of these companies. So I get access to a lot of very interesting opportunities through that. But again, I can select a category that I feel most comfortable in, or that I have a background that gives me some expertise and perspective on that particular market segment.
Yeah. Well, very, very cool. Just all these things you guys have access to and that you're plugged into with your networks, and all the events and all these groups. It's just it's a real valuable set of benefits that you offer to your members. And so congratulations. I'm really happy for you guys, and I'm happy for your members for this first successful exit, which is Gem and Jewel within Fund 7, within Generator, that the WRBA is invested in. So very, very, very cool talking about that with you. yeah, I hope this information is interesting and helpful to whoever's listening. So my name's Aaron. I've been with Jeff and Leanne of the Wisconsin River Business Angels. So I'll talk to you guys later.
Thank
Hi,
you.
Aaron.
Thanks for listening to Angel Impact, the official podcast of the Wisconsin River Business Angels. To learn more about the Wisconsin River Business Angels, visit the website at www.midwestwealthventures.com or find us on Facebook.